I have the only 100% win rate strategy. As you can see here on the FTSE, it's win after win after win. Same here on the S&P 500, it's win after win after win. On screen now, you can see my equity chart, which is just moving to the upside. So in this video, I'm going to show you exactly how I do this and how you can do it too. So here we are. We are now on the S&P chart. So what I'm going to tell you probably isn't what you want to hear, but the win rate I showed you, all the entries, they're 100% real. However, the difference is they are on investment accounts. They are not from actively trading. So the way that works is every month I buy the S&P and I buy some other index funds and I just track them on the S&P, and I'm just buying and buying and buying. And because the S&P and a lot of the indices markets will just flow to the upside, generally speaking. You will have dips, but they're just extra buying opportunities in my opinion. And this is not investment advice at all, but this is the only way you can even come close to such a good win rate and such consistent returns. And the reason is most institutions, most professional traders cannot match the S&P. Warren Buffett once put out a bet for hedge funds and said, I bet you can't outperform the S&P. And they couldn't. And it's just facts. So the way to essentially become risk-free in the market is just invest. And sure, for the first month to sort of year, you're definitely going to see some drawdown at some point in your investment account. However, over the next 5, 10, 15 years, it will get to a point where your P&L is so high, you've essentially not taken a loss. Your win rate is 100%, and the gains are just more than you would get from trading. Now, this doesn't go for everyone. There are traders like myself, and I know Trader Nick, and a lot of other traders that have been doing it for a long time with large amounts of capital and a lot of understanding of the markets can outperform the S&P. And the reason a lot of hedge funds can't and some retail traders can is because funds, trading floors, institutions, they have to stick to very strict rules like risk management. They can't just go in and take a trade because they see X, Y, and Z. They have to sort of pitch trades and come up with ideas and all that sort of stuff. There's a lot more regulation they have to follow. So I'm not saying I'm better than them. I'm just saying I have more free will in the markets to be able to outperform. So the reason I'm saying all this is not to discourage anyone. That's definitely not what I'm doing. But what I'm saying is if you are a new trader, you're more than likely not going to be outperforming the S&P, let alone performing at all. You'll more than likely be losing money. So during the period that you are losing money, you are better to deposit into investing and start your investing journey young and early, and give yourself a head start for your retirement or for later in life when you want to buy a house or you want to move abroad or you want to do things or invest in property. You've got a huge amount of cash sat in an investment account that you can pull out at relatively any time. Now in the UK, I can only put in £20,000 a year, which is a little bit of a shame, but it's still £20,000 a year that is growing and compounding without me having to do anything. I can just put money in every month and leave it. I don't manage it. I don't do anything. When I'm actively trading, I am on the markets. I'm looking at news. I'm in, I'm out. I'm constantly analyzing. It's very busy. So when I'm not doing that, when I'm on holiday, when I'm doing something else, I don't have to worry too much because I know my money is still working for me. But my point is, newer traders are going to lose money in the markets, at least for the first 6 months. And that's assuming that you have a good mentor. If you don't have a mentor, you're doing this yourself, or you have a bad mentor, you're going through all the courses and the YouTube videos and all of the general stuff that people do and then, still aren't profitable at the end of it. It's more than likely going to be 1 to 2 years until you're actually comfortable in the markets at break even. And then it might be another 6 months until you actually start making money. So during that period, rather than your P&L just doing this very gradually over time, or even worse, it just goes up. You have maybe a huge win just because you're over leveraged, you're gambling, you don't really understand what's going on, and then it just drops off because you are margin called, and that's just the way it works. What you can do is have your investment account doing something like this going up over time, which is where you deposit the majority of your capital to start with. And then your trading account, if it looks a bit like this with lower amounts of money, so whether it's a demo account or whether it's just, $50 a month that you're just using to test and dip your feet in with, it's not an issue, because the majority of your capital is still working for you in a safer environment. Now, don't get me wrong, there are still risks to investing. I'm not saying it's completely risk-free. That would be a ridiculous statement. However, it's a lot more risk averse compared to just putting all the money you have into a trading account and trying to make millions from it. Because we all know a 100% win rate isn't possible. Now, disregard everything you've seen on YouTube, Twitter, and Instagram. You will not get a 100% win rate, and I can guarantee it. You might have a week of non-stop wins, maybe a month, maybe even 2 months at a push, but eventually you will have a losing streak. And as soon as you have that first loser, your win rate goes down. And it just continues like that. So you might end up with a 45, 50, 60% win rate. They're kind of the averages you can expect if you are profitable. But generally speaking, it's next to impossible to have a 100% win rate. The only way you could even sort of attempt to have a super high win rate, like 80 to 90%, is doing a huge amount of global macro research. So into geopolitical events and, what's going on in every sort of country and things, and maybe taking 2 to 3 trades a year, catching huge trends like this, and that's it, you call it a day. However, that's called position trading, and most retail traders, firstly, don't have the capital to do that, and secondly, don't have the understanding how to do that. A lot of the time they'll be on the smaller time frames, whether it be the hourly, the 15 minutes, whatever it may be, trying to just catch smaller moves in the markets. And trust me, that is a lot more difficult than just getting into the market and just following the trend over a longer period, whether it's a couple of weeks or a couple of months. So again, I know this probably isn't the video you wanted to see, but it's probably the video you needed to see, because what I don't want is for you to start looking for these 100% win rate videos, coming across one that is complete rubbish. Whether it's these moving averages, when they cross you sell, or when they cross you buy, when the RSI becomes overbought you sell it. Those types of things don't work in the long run. Sure, you might catch some small moves, like the RSI is oversold here and we're starting to see a bit of a bearish candle. Sure, maybe you can catch some things here and there, but again, over the long term, those types of things aren't sustainable and they will not make you a profitable trader. If you combine things, then sure, but this isn't a strategy video, to be perfectly honest. If you want to see how I trade, I've got multiple videos on my channel. But again, I just wanted to make this video to make it very, very clear that you can win in the markets over the long term if you do it in a safe way, investing. And then while you're doing that, when the majority of your cash is going into one safe investment or multiple safe investments on something like Vanguard or AJ Bell or some sort of other thing. I don't have any affiliates, so I'm not going to name them all. But some sort of investment account. And then again, put smaller amounts of money into your trading account, money that you, first of all, are happy to lose, because you will lose it. The stats are not in your favor. And secondly, money that you can use as education. So, if you're just using YouTube videos rather than buying courses and mentorships, the money you would be spending on courses, put that into a trading account, use that as your educational fund. But what you can't do is dive into your savings and deposit all of it, or dive into your paycheck every month and all your disposable income, even if it's just $200. I know times are hard. Don't put all of that into a trading account, because you will lose it. And there will become a time eventually where you stop losing and then you start making. But during that losing period, it will feel awful. If you're losing your paycheck and you're living paycheck to paycheck already, you will not have fun, and I can guarantee it. And I really don't want that for you, because I've been there, and it's not easy. So that's my lesson here. And again, boring video, but if you enjoyed, please leave a like and subscribe. You can see, if you do want to get some sort of education or even professional level signals based on economics and technical analysis, then you can join my Discord. Links in the description. But yeah, that's it from me. So thank you for watching. Have a great day.